very warm welcome. You're watching Your Trades on ET Now. This is Priyanka Uppal along with me, Snehi Shah. Snehi, another day completely in favor of bulls. And on the back of strong earnings, weekly expiry, what a day we saw. In fact, there was a broad range for Nifty, Bank Nifty both today. Bank Nifty had almost 800 odd points of range today, though the macro cues were not that supportive. What a great day for Indian markets, but individual names and especially the sectors like PSU banks, private banks, PSU in total as a space, they made a strong move today. Healthy advance decline ratio in broader markets was seen clearly today. PSU banks, private banks, we saw that private banks had already made a comeback, but then the way PSU banks also rallied today. However, some gains got slid just because of the Kotak Bank on the RBI news on Kotak Bank. But then we did saw sectoral gainers in terms of sectoral gainers. And the top gainers for Nifty were banks only. Axis Bank, SBI. Talking about the other top 5 gainers, amongst the top 5 gainers were Dr. Reddy, JSW Steel. Metals were again yet another day of the strong strength. That's sector stand tall today again. Some names from the broader market which made this healthy moves today. Bharat Forge, AB Group stocks again rebounded. They were back in trade. Vodafone Night kind of stocks. MCX rebounded today after a slide yesterday post the numbers. So a lot of action from the broader markets, individual names, earnings. Of course, the big numbers we had to report earnings today. We saw move coming in from there. At least Axis Bank was a stellar move today.
Axis Bank stellar move coming today, and that was one of the reasons why the Nifty ended the day at the highest point of the trading session as well. And Axis Bank has supported the Nifty going ahead. And when you look at Axis Bank's numbers have been brilliant. NI has come largely in line. PPOT and PAT have come above estimates, and they've seen higher fee income this quarter as well. And NI is at 4.4% versus the 2.5% that the street was penciling in. Axis Bank, very good moves coming over. The stock up 6% in today's trading session. On the other hand, you had Dalmia Bharat that came out with rather weak set of numbers coming in. A drop in EBITDA is what was reported, but revenue, however, above estimates. Margins were the one that were causing pressure on the stock at 15.2% versus 18.5%, so that was lower than estimates. And on the back of that, the stock was under pressure, down 7.2% today. And well, we also need to talk about another Nifty 50 company that came out with its numbers today. And along with Axis Bank, you also had Nestle India, and a very good set of numbers coming in from Nestle as well. Earnings in the March quarter beat estimates. We did have some news coming in on the front of Nespresso coming in as well, and the tie-up with Dr. Reddy also. So lots of good commentary coming in over there as well. Outlook looks rather positive, and Nestle also did pretty well in today's trading session and also supported Nifty going ahead. But also then moving on, Priyanka, you also had, like you mentioned, you had AB Group and Vodafone stocks, Vodafone in focus as well today. What a brilliant move coming for Vodafone as well.
Absolutely. In fact, not just Vodafone. In fact, you talk about the entire group again. You see the move in Hindalco today. The kind of move in the cement counters also we saw. In fact, Aditya Birla Group, there was an exclusive which we did during the daytime also, that Aditya Birla Group is in advanced talks to buy promoter stake in Orient Cement. One entire pack which has been buzzing from last so many days. But then let's talk more about Kotak Bank here, Snehi, because what we saw, the RBI ban. In fact, a couple of brokerage note came on Kotak Bank also. And then now brokerages, Jeffries, believe that if the resolution takes more than 6 months, if the ban stays for longer, then it will impact the revenues and cost of the company in longer run also. In fact, Nomura mentioned this, that the bank's medium-term objective of scaling up will get hampered if this ban continues for long. So this one stock, clearly a big hammering came on Kotak Bank. Nearly 11% stock was down in the trade today. But then now, what lies ahead for markets? In technical terms, where are we standing, and the kind of move that we saw on the expiry day? How should we start on, what a strong footing. Kunal joins in to talk more about the index. In fact, Kunal joins in from the studio only. Kunal, what an end to April series, and now from tomorrow we start the May series. The kind of footing we are at, can we expect 50,000 or 51,000 kind of level on Bank Nifty? That's what the experts are believing at this point in time.
Yeah, I think it's very much possible given the way the swing has happened for the index in the last 7 or 10 days. The texture has changed completely for the indices now. From a point where the Bank Nifty was, I think, around 46,000 approximately, towards a point where we are just 500, 600 points away from the life highs for Bank Nifty, and I think 200 points out for the Nifty from the life high levels. I think more importantly, today's move was more of an all-round move because we required large cap names to fire up, and today was a classic day where you saw large cap stocks not just firing up, but then many of these stocks have shown signs of bottom formation. Many of the stocks and underperforming names have shown very good comeback. And generally when this happens at the fag end of the expiry week or the expiry day, we generally expect that the carry forward sentiment to the next series is a lot more positive. So I would believe that the next series onwards, we could be looking at a much more vibrant market, not staggered or specific towards certain stocks, certain sectors which have been doing pretty well. But I would probably believe that it could be an all-round market going forward. I think that could aid the index move going forward as well.
All right, Kunal, that's the word coming in on what's expected of the markets going ahead. An all-round market is what you're saying. But Kunal, amid a market like this, what are the stocks you're picking up?
So I'll go with two contra buys and expecting breakouts for these two names. First one is IEX. I would actually expect the stock to get into a big breakout mode. It's been a huge underperforming stock, and my sense is that the underperformance could get covered up into the stock price pretty soon. So would suggest a target of 175. Stop loss could be kept at 150. And the second would be Adani Piramal Enterprise, a classic double bottom at play. The stock making a double bottom support closer to this 850 odd levels. Today, the stock confirmed a breakout of the previous swing highs of 900. So, expecting a strong 10% plus up move for the stock. 1000 as a target for Piramal Enterprise and stop loss at 865.
All right, Kunal, well, thanks so much for taking us through that. On that note, we'll let you go. But viewers, let's slip into the segment of Word from the Wise. And Sunil Singhania, founder at Abacus Asset Managers LLP, believes that India is an infrastructure deficit economy. Listen into his views on this space and what else he had to say.
We are an infrastructure deficit economy or a country. We have 150 airports, out of which 75 have been built over the last 10 years. Whether this 150 can become 300, 100% they can. There are almost 55, 60 cities where metro work is going on in some parts of in some bits and other. We have this huge focus on railways. It is expected that next 5 years, almost 10 to 12 lakh crores will be spent on railways. We have seen the fruits of Vande Bharat being run and how people are loving it. The first bullet train, hopefully between Mumbai and Ahmedabad, should be up and running in the next 2 years, which should encourage many more cities to be connected. So infrastructure, if the country has to grow to 7 trillion and beyond, I think there is going to be a focus on infrastructure.
All right, so solar and infrastructure, these are the potential big themes what Sunil Singhania also recommended on the show. We'll stay for a short break here. More to come on the other side of the show. You're watching Your Trades, and now time for a derivative check. Both Nifty, Bank Nifty close to the highest point of the day. If you talk about the trend of Nifty, Bank Nifty, now since we're starting a new expiry starting from tomorrow, that's the May series, and long build-up was seen on clearly Nifty, Bank Nifty. In fact, the range for the indices has risen upwards now. Now there's a call buying which we could see at 22,600, 22,700 strike. VIX also gained a percent, clearly nearly a percent today. But then what we saw, that support has also risen now. Now the support which the market is eyeing at, because the maximum put writing was at the strike of 22,400, which happens to be the support. When a lot of F&O counter which were in action clearly today, Snehi.
Well, absolutely. All right. With that, let's get a move on and talk about the big story of the day, and well, that undoubtedly has to be Kotak Bank, down and out, beaten out in today's trading session. Now, Kotak Mahindra Bank's MD and CEO has written to employees saying that they will continue to onboard customers via non-digital channels. My colleague Ankur Mishra, who's been tracking this story and this development very closely, is joining us with the details. Ankur, help us understand this latest update coming in from Kotak Bank.
Yes, after RBI has put an embargo on onboarding of new customers through digital channels as well as issuance of credit cards, now Kotak Mahindra Bank MD and CEO is trying to calm the nerves of employees first. The good thing is that he is acknowledging that there is an enormous growth in digital channels. He says explosive growth in business channels through digital channels has necessitated a completely different level of tech infra. So that realization is there, and he also mentions that he is trying to resolve the issue which has been raised by Reserve Bank of India. However, one thing is clearly clarified, that they will continue to onboard customers through non-digital channels, that means branches and all, and onboarding across all products other than credit cards will continue. So there is no embargo per se on addition of customers through branches. That will continue. Only the onboarding through digital channels, that has been put on hold by Reserve Bank of India. But all in all, what MD and CEO is trying to do, getting the acts together, getting employees together, so that the questions which has been raised by Reserve Bank of India can be answered and the issue can be resolved in near term.
All right, thanks very much, Ankur, for those details. Now talking about the Aditya Birla Group, the funds raised through Vodafone Idea's FPO will be spent on capex, according to KM Birla, Chairman Aditya Birla Group. In an exclusive conversation with ET Now's Aishwarya, he spoke about fund utilization plans and also the debt levels for the company. Let's listen to him.
So I think the big one now is to spend the money on capex. The three big parts of that is to increase the size of the network. The second is to densify the network in areas that we are present, and third, of course, is implementing 5G selectively across the network. So that's a task cut out for us. I think that we're very happy. This is a new life for Vodafone Idea, and we look forward to being an outstanding service provider to our customers.
So on the debt servicing front, any timelines on that on that kind of?
So actually, we have only 4,000 crores of debt due to banks. So we are quite debt heavy, debt light in that sense.
So in terms of Indus Towers stake, any word on that? Whether
nothing just now. There's no definitive path that we've charted out just now.
Well, the action continues from the group again. In an exclusive source-based news, what we've learned is that Aditya Birla Group is in advanced stage talks to buy promoter stake in Orient Cement. In fact, promoter stake is around about 37.9%. CK Birla, along with some private investment vehicles, owns around about 37.9%, and the AB Group is in advanced talks to buy that stake. Let's understand. That means, according to as per the market cap today, the deal could be around 1790 crores. Let's understand how can it be rewarding situation for Aditya Birla Group, since there is a consolidation happening in the entire cement space. That what we know. Orient Cement, which has key exposure in Southern Belt and a lot of exposure and good sizable exposure in Maharashtra also. They are trying to expand and explore new markets in northern region. Talking about financials also, in fact, the EV to EBITDA for Orient Cement stands of 7 times. Around about 153 crore was the net profit last quarter, and 85.5 metric per ton is their capacity also. So understanding from that standing point that the big players are on an aggressive capacity expansion plans. Aditya Birla Group's combined cement capacity, if you talk about, that stands around 180 MTPA. And talking individually about Ultratech Cement, they have plans to take it to 200 MTPA by 2030. So there is one organic reason that these players, big players, are growing, and second is they're acquiring the smaller players, which are the potential M&A players also. So if this deal goes through, then there can likely be an open offer also. Srishti, yes, Nehi?
All right, well, so let's get a move on then from the AB group of stocks, and let's talk about another stock that was largely in focus today, and that is Bharat Forge. That was on the tear today after Bank of America upgrades their stance to a buy rating. Let's go across to my colleague Srishti to get all the details on this brokerage note. Srishti, take it away.
Well, yes, a big upgrade coming in from BofA on Bharat Forge today, where they have not just upgraded the rating but have hiked the target price as well. Onto the rating front, from an underperformed rating earlier, they have upgraded it to a buy and raised the target price from 1,000 rupees to 1,450 rupees now. What they are saying is that the trucks aren't slowing yet, is what we are seeing in the North America truck sales as well. No significant downside on a month-on-month basis is what we are seeing. The downside risk is off the road, and what BofA is saying that plus the new wheels of the new growth are accelerating for Bharat Forge. Case in point being the 3 segment witnessing solid scale up is firstly the defense segment, secondly the PV exports are doing well, as the industrial casting is also one of the business that BofA is bullish on. Other than that, they're also saying that there's the resilient business model warrants a premium valuation, and keeping all of this in view, they have actually hiked the EPS estimate by 7 to 15% for FY25 as well as 26 earnings to factor in the scale up in the defense as well as PV exports and model in less severe cut in the truck revenue. So all in all, very positive commentary coming in from BofA on Bharat Forge today, and hence we are seeing no stopping for the stock of Bharat Forge today.
Well, all right, Shrishti, thanks for that. But we're getting numbers from Tech Mahindra coming in. Let me take you through what the first cut is looking like. Consolidated revenue has come in at 12,871 crore rupees versus 13,101 crore rupees on a sequential basis. That slip is something that we had expected, but we had expected a slip of almost 1%. But on the other hand, the slip has come in at slightly lesser than that. So we'll also see how that pans out for the stock tomorrow. On the other hand, when you talk about the US revenue, dollar revenue has come in at 1,548 million rupees, which is down 1.6% on a QOQ basis. That's 1.6% down sequentially, and this is, we had expected this, ET Now's poll expected this to come down by 1%. So that slip is also slightly more than what we had expected coming in. They've reported an EBIT margin at 10.9%, which is up 220 points on a sequential basis, and EBIT has also come in at 638 crore versus 703 crore, which is also down sequentially. On the other hand, let's also talk about the other numbers that have come in. They've net new deal wins have come in at $500 million. LTM attrition has come in at 10%, which is flat on a sequential basis. But largely, if you have to look at these numbers, revenue has come in line, margin has beat expectations as well. And now on the show, we are being joined by our experts who we have connected to make sense of these Tech Mahindra numbers as well. We have Mahintesh Sabarat, who's an independent market expert, and we also have Sandeep Agarwal, fund manager at Sovilo Investment Managers. Gentlemen, thanks so much for joining us, taking the time out. Mahintesh, I'm going to come to you first. What sense are you making of these numbers right off the bat? Dollar revenue, we've seen some change coming in over there as well. So what are you, penciling in for this stock to perform tomorrow? And what's just your first take coming in on this, on these numbers?
So let me talk about the first take on the results. The quarter-on-quarter revenue decline, that is on a constant basis of 0.8%, is more or less kind of expected. But however, you should understand that somewhere the company has been losing momentum. It was anticipated that there could be a positive, commentary coming in from the company, so that the year-on-year decline that we've been seeing for them should be now a thing of the past. The deal wins is one way to recognize whether they're doing better. Your deal wins at $500 million, although is quite good. It's from a deal to revenue perspective, deal wins to revenue perspective is quite minuscule as yet. So my first take is slightly disappointed that we are not seeing any upgrade.
We do have Sandeep Agrawal also to talk about the numbers. Sandeep, your first reaction on the numbers, and how do you think the stock will perform tomorrow, can perform tomorrow?
So, thanks for having me on the show and good afternoon. These numbers are slightly below estimate, but at the same time, I would not call them a big miss. And remember, there has been a leadership change and there have a lot of changes which have been started in the company, and based on that, this kind of numbers along with the order book, I would say that people have more positive to read about than negative. Talking on the stock reaction, it is very difficult to comment because we also have client position, our positions, we run a PMS, but so we may have exposure. So, but let me put it this way, that this number should be seen from a perspective of a new leadership change which is trying to implement its own long-term strategy. So I would not call this number bad at all. And in my view, more details will come on the call. But prima facie, if the bad time, if we at all assume that, the big pain of recession in US is behind us, then in that case, we are probably looking at growth which should come in coming quarters, and also most of the pain or the cleanup which was there, that is behind. So I see this with more positive lens than negative. Obviously, if we get more data on the call, that will add to our view on either side.
Thanks for that view coming in, Sandeep. Mantesh, I'm going to come right back at you and give us a broad sense of how Tech Mahindra is faring when you put it into perspective with companies that have already come out with their results, the likes of TCS and Infosys and now Wipro as well. So could you make sense of these numbers and compare it with the other IT majors that have come out with their numbers in terms of dollar revenue or constant currency, whichever metric you would like to choose?
So if I compare the results that have come from the IT companies so far, there are two trends that are visible. There is no substantial momentum in terms of revenue growth visible for any of these clients. The deal wins aren't strong. So this is the trend number one. Trend number two, which is a little mixed in terms of the EBIT margins being posted by the companies. Some have shown an improvement, some have seen a decline. But herein also, if I single out TCS, which has shown an improvement, that has come from curtailing a lot on the employee expenses side. So that company, which is a little more ruthless in terms of controlling their employee costs, are probably reaping the benefits of better margins. But better margins will still not overcome the lethargy or the sluggish growth we are seeing on the top line. So it's better to take the results of most of the IT companies with the fact that unless there are more deal wins, stronger deal wins ahead, one needs to be a little more careful about what price you pay for any of these stocks.
All right, Mahantesh, Sandeep, thanks so much for joining us and taking the time out and making sense of these Tech Mahindra numbers. We'll bring you more details on these numbers as and when we get them. And well, we'll be closely watching out for the stock performance tomorrow as well. But along with Tech Mahindra, now we also have numbers for IndusInd Bank coming ahead. So let's take a look at what IndusInd Bank is looking like. And on a year-on-year basis, the net interest income has come at 5,376 crores versus 4,670 crores. So that is up 15%. As of now, these are the numbers that we are getting for IndusInd Bank. We'll bring you more details as and when we get them. But well, yes, largely this is what we are seeing for IndusInd Bank right now. More numbers we'll be connecting with you shortly on those. So, well, yes, that's IndusInd Bank also flashing on the screen. We also have the profit figure now. Profit has come in at 2,347 crores, above that ET now estimate of 2,041 crores. So, well, that's a good number coming in as well. NII also above ET now's poll by quite a bit of a difference. So, first look seems like it's a good set of numbers coming in as well.
In fact, what expectation, what we're drawing is that the advances and deposits both should grow. That's the poll what we are baking in. Let's see the advances. What estimation what we had was it can grow about 18% Y-on-Y figures. Let more details pour in, then maybe able to make it better. But then 3.42 lakh crores, the advances could, the figure could come out to stand out too, and deposits could be around about 3.84 lakh crore. Key monitorables could be lot many, like sustained current levels of loan growth, which needs to be watched out from here. But then two important Nifty earnings again, IndusInd Bank or Tech Mahindra, and of course many stocks which were in bust today. Gaurav, I believe is ready with us to help us with the list of other stocks which were buzzing in trade today. Gaurav.
Well, yes. First, let's talk about RVNL because this company emerged as the lowest bidder in two of the bids. So, first bid is coming up from the Southern Railway where the value is going to be around 239 crore rupees, and the second bid is where coming from Central Railway, and the bid amount is going to be around 439 crore rupees. So, all in all, a bid worth 678 crore rupees where the company is selected as the lowest bidder, and on back of this, we saw a positive sentiment hitting up this stock. Next, let's talk about Schneider Electric because company's parent company actually gave a positive commentary about India's subsidiary. So, they said that we may see double-digit growth in India's subsidiary, and on back of this we saw Schneider Electric was also up in trade today. Next, let's talk about GPT Infra because as per the interview given to ETNA only, management gave a strong outlook for the company. So, for example, they believe that revenue could grow somewhere in the range of 20 to 25% CAGR for the next 3 years, and at the same time we may see EBITDA margins maintaining above 13% or at 13% level. And on back of this we saw a positive sentiment hitting up this stock as well. Next, let's talk about Nestle India because the the company's results came, PAT was actually above the estimates. Even if you look at the EBITDA margin, that was above estimates. And apart from that, company gave final dividend of 8.5 rupees per share, and company also announced its launch of Nespresso with collaboration with Dr. Reddy's, which was actually a much awaited collaboration, and that is why we saw a positive sentiment hitting up in Nestle India as well. And lastly, let's talk about Bharat Forge, because this stock was up in trade because Bank of America recently, while maintaining buy rating, upgraded the target price from 1,000 rupees to 1,450 rupees per share. So a positive sentiment was seen in this stock as well. So all in all, we will definitely watch out for all these stocks because we saw some positive commentary and positive sentiment coming up in the stock in the day to day.
Gaurav, thanks so much for that. Let me come back to you viewers with more updates that we are getting on IndusInd Bank's numbers. Operating profit has come in at 4,027.1 crore rupees compared to ET Now's poll of 3,753 rupees. So that's a good number coming in as well. And IndusInd Bank is going to go ahead and pay 16.5 rupees per share as dividend. And when you talk about asset quality, that has also come largely stable on a sequential basis. GNP at 1.92 and NPA at little more than 0.5%. And provisions on the other side are down 3.8% sequentially. So yet another positive coming in for IndusInd Bank. But results are largely in line with what the street was expecting and slightly better than what we were expecting at ET Now. So well, tomorrow we'll see how the stock fares in tomorrow's trading session, Priyanka, as well.
All right, of course, absolutely. Well, that's all in this edition of Your Trades. Thanks so much for watching. Lot more to come from the US front also. Mega cap earning continues. Meta we saw plunge today, but then a lot of more earnings to be reported today, and a lot of economic data also.
Well, yes, but with that, it's a goodbye from me and Priyanka.
If you like this video, then like, share and subscribe to ET Now.